Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method. If you're new, a very warm welcome and welcome back, KS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love, based on more than 30 years in financial markets. If you would like to know where smart money is buying and selling, please subscribe. Let's run the numbers. If you or your family members are currently going through a life pullback, please know that the sun will come out again. And we're sending love and healing thoughts not only to you, also your entire family. There's so many things that can derail us in life, dealing with sickness, loss of a loved one, separation from family, relationship breakdowns, conflict, addiction, sadness, anxiety, depression. There's just an unlimited length of lists that can pull us down. But always remember, when you hit resistance, you're just pulling back to gain strength for your next life rally. We have a very strong and a very small global family. That global family is here for you. Always keep positive. No matter how dark things may appear, the sun will come out again, and there's no pullback without an equal or often far greater life rally in store for you. Better and brighter days are awaiting you and those you love. The main markets in the last trading session were a little bit, technically, bananas. We saw the Nasdaq just spike up whilst Bitcoin spiked down. The DXY, the US dollar currency index, went ballistic, as did yields. Gold retraced dramatically because as yields increase, inverse real rates also increase, and gold does not like that. We also saw oil starting to get above resistance. What is most noticeable is the VIX broke down. Turning to the crypto market, we saw as the DXY increased and yields increased. Bitcoin did not like that very much. Bitcoin's gravitational pull was to the downside. And we see Ethereum following Bitcoin's gravity, BNB following Bitcoin's gravity. XRP, on the news of the released Hinman documents, has been going for it. There's no other way of saying it. It's really doing well. And XRP must win the court case against the SEC for the entire crypto industry. If it does, the SEC's case against crypto will be set back decades. The crypto industry represents the dawn of a new internet of money. The existing banking system doesn't like that much, and we'll have a look at a few news articles in a moment. XRP fighting the SEC so valiantly is a plus for the entire crypto industry. We can see ADA following Bitcoin's gravitational pull, but it's currently stronger. Doge is following. Solana sold down when Bitcoin sold down. Solana is very sensitive to both the upside and the downside movements in Bitcoin. Just pay attention to Solana. It's a very, very good forward guidance on the market. We can see that Matic has been quite weak recently. It reacted to Bitcoin's gravity. We have a rule, Rule 45. No alt can escape Bitcoin's gravity. We see it play out each and every day. Always remember, gravity is not instantaneous, and we're always looking for inverters. Yesterday, users on Binance were informed that the fiat pay ID off-ramp and on-ramp to Binance had been closed immediately. When things happen immediately, that's not such a good thing. And digging more deeply into the story, we found the real culprit. Westpac places an immediate ban on payments to Binance crypto exchange. This is in Australia. I was quite active yesterday on Twitter. Cointelegraph reported Binance Australia suspends Aussie dollar fiat services, citing issues with third party. The local payment services provider Zepto was identified, but we can see it was actually Westpac. The banking system controls the on-ramps and off-ramps for fiat. That is government-issued money. Banks create reserves to make sure that they retain some of the money that they loan out. There's a thing called the credit creation multiplier, which is basically saying there's a small fraction of reserves that's kept each and every time the bank loans out money it never had. We've discussed it many times on the channel before. The bank could get $100 deposit, and if it has reserve requirements of 10%, it will loan out $90, and then it will take that $90 finds its way back into the banking system where reserve requirements are still 10%. So they loan 81 out, and it continues and continues and continues. You can see over these stages, $100 has become 651. But what's the end point? When this goes through infinitely, the $100 at 10%, you just divide it by 0.1, turns into $1,000, a 10x multiple. What does this actually mean, you say? When we look back to 2020, only 7% of the money supply was actually physical. That means that people could go and get their money out of banks. Just let that sink in. 7% 3 years ago. And 3 years ago, they were starting to ramp up the money printers, but they've been going absolutely ballistic. It's probably about 3% now. Of course, the banks have to stop any run on funds. Why is that? Because they're simply not there. And how is this being revealed? Because of those fiat on-ramps and off-ramps. What are the banks doing to stop this? Because there was no alternative to the banking system. All the big boys just shuffled money between each other, but now there's diversions. Crypto is coming in, and it's gaining a lot of popularity. What's happening here? Just 11 hours ago, Australian Big Four Bank begins trials for cryptocurrency payment blocks. Why is it blocking crypto payments? Because that money is seeping out of the financial system. What does that mean, Ken? It means that the credit creation multiplier can't do its job. Not $90 is being lent out and coming back into the financial system. It's far less. It could be 80, 70, 60, and this impacts the entire banking system. So what are banks doing about this? And what is government doing about this? It can only do one thing, to create its own central bank digital currencies. Remember that little statistic, 7% physical of the money supply 3 years ago. It's likely to be less than half of that now, say 3.5%. If people do a run on banks, there's simply nothing there. People are waking up to this fact, and they're understanding that this is just the reality of the financial system. So what are banks and governments doing all around the world? They're doing central bank digital currencies. Why are they doing this? Because they need to. They have no choice. The world has become digital, and because it's become digital, it means that digital money is here. Governments and the banking system know that they cannot avoid crypto. Crypto actually is the key to their salvation, but they must do what they do in a specific way. Personally, when I see news headlines like this, I'm saying, adoption is really picking up on crypto. The crypto market is actually a $1.12 trillion global market. It's not going anywhere. It's just increasing over time. And this is in the middle, well, probably towards the latter end, of a very, very harsh and nasty bear market. With the dollar going up, yields going up, gold is coming down, and Bitcoin, the world's most sensitive risk-on or risk-off asset, is feeling it. We've been carefully watching the DXY, and we knew the DXY was coming up to smart money sell resistance. It was rejected, but if it could get through that smart money sell area, it was going to pop because there's a lot of fresh air there. It was really interesting to watch this. When the dollar started to break out of this smart money zone, it went straight up. That's what happens when the sellers run out of energy. That's why these SZs, these Stanfield zones, are so incredibly powerful. They actually tell you when price is going to move. And we can see the dollar exploded through, and we know yields came up as well. We saw yields doing the same thing, just getting and bounding between smart money buy and sell levels. But then it popped and we had a bit of a fresh air gap and it's going up. What this means is it throws pressure on inverse real rates and it causes gold to go down. Gold is a flight to safety. You must keep your eyes on yields and especially the DXY. And the DXY also affects the stock market and it affects crypto, but it doesn't always affect it instantaneously. We've been paying a lot of attention to gold recently. Gold could not break through this smart money sell area at around 2020. What does this mean to us? The next smart money buy area was around the 2000 mark, and we mark up our charts with the CTKS method, which reveals objective dynamic market structure, or ODMS. Price is always bounding between smart money sell levels and smart money buy levels. If it's too weak, it will go down to the next one. You can think of these things as safety nets. They catch price. And there are strong safety nets and weak safety nets as well. We can see when gold came down to around the 1985 level, it was getting bought up, but it couldn't hold on, so it was heading down to 1972. We can see that there was some consolidation, and what happened? That 1972 level was taken and then taken out, which meant 1961 and then lower, 1954, was in order. This is why you must know where the true structure is inside any price chart. And these price charts are always living. They're alive. The CTKS method is a new standards-based process that reveals smart money buy and sell levels from any price chart. And you can learn it yourself and apply it. You'll see that the levels obey. They're incredibly powerful. When you apply the CTKS method, make sure that you're marking up all of your tier 1 charts. Mark them all the way back to the start of price history. Tier 1 charts are market moving charts. They're incredibly important. They will set and create sentiment across all asset classes and all sectors. Tracking Bitcoin's price recently, and Bitcoin is currently 26,741. We had a smart money buy area around the 26,600 mark. There was a lot of overhead resistance above 27,900. What did we witness in Bitcoin's chart? We had fresh air, so it came up strongly, but the sellers were too strong. They pushed it down. And where was price going? If it was pushed down, it was coming back to this 26,650 level. And that's what happened. What happens next? If Bitcoin starts or continues to break down, goes through this 26,600 mark, it's heading down to 25,900. Or if it consolidates here, it's going to retarget this 27,900 mark. The CTKS method gives you where the safety nets are in terms of price, and it also tells you where the ceilings are. Without the CTKS method, you just don't know where true market structure is. Turning to the crypto market, the greatest gainers in the past 24 hours: Mask, XRP, Render, Flare, Aave, Nexo, and Trust Wallet. The greatest losers, top 100 past 24 hours: LDO, Woo, Conflux, Optimism, Algo, Sui, and Axie Infinity. Today, I'm going to catch up with James from InvestAnswers. Many of our beloved CTKS family has been requesting that I have a chat with James, and James and I are getting together. It's going to be a lot of fun. Stay tuned, that one's coming out today. As a global family, we live by the concept of positive excellence. As you go through life, you realize that money is not everything, although when you're young, it pretty much appears to be everything. As we grow older, we understand persistence, commitment, learning, humility, determination, confidence, strength and boundaries, but especially gratitude and happiness are really what gives life meaning and fulfillment. Doing whatever you can to create inner peace and outer peace makes you truly, truly wealthy. Wealthy thinking starts in your mind, and it's all about better habits and positive affirmations. We can't just make positive affirmations and hope that our life will change. We must take action. That's why a particular part of the CTKS Creed I just adore. It's the positive affirmation. I am dedicated and committed. I win or learn and never blame. These particular words can supercharge your future and supercharge your present as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.